Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish white Mariboso and effectively a third bullish white soldier yesterday, plus a clear signal for a move higher after the previous session's indecisive spinning top. As the previously highlighted mid-July to date bear channel, currently at 102.92 to 105.44, which is highlighted in bright red on my daily chart, is a fairly narrow bear channel. The topside targets for such pattern are not too far away. Thus, a primary target is in the 107.10 area, with a secondary target X1, so the first one is target X, X1 in the 108.05 area. Overhead, we now have the declining short-medium moving average currently at 106.97. Then the April 2020 low at 107.25 and the May 2020 low at 107.66. Before we start looking at the combination of the flatlining long moving average, currently 108.16, and medium moving average, currently 108.24. Meanwhile, below we have support from the 2020 low at 106.36 and congestion at 106.13. But better support ahead of the bear channel is at the April 2017 low at 105.68. So far today, a small continuation higher, though the market does seem cautious, halting ahead of the overhead short medium moving average and turning back down. Cable, aka sterling against the US dollar. A bullish white Mariboso yesterday and effectively a third bullish white soldier as well. Despite the move higher, the market continues to exhibit a wide-ranging indecision between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 22 move overhead at 123.16. Though I do note how we are near the top end of the range. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. Now the primary target was achieved in mid-September, but the secondary target looks very much out of reach as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 21 to September 2022 move at 123.16. I am minded to retire target X1 after this commentary. I have over the last two sessions pondered on whether the action since mid-August may not have elements of a bearish half hesitation or a double bottom about it all. I've repeated how it all seemed a little too early to say which it may be, but I'm now looking to favor the idea of a small double bottom. It is not set, but just the beginnings of an idea. So far today, well, a follow-on higher with a move up over the June 2020 low at 122.48. That had acted as a closing cap on yesterday's action. Overhead is now the 50% Fibonacci line at 123.16. And then nothing much more until the declining short medium moving average, currently 124.12, and a flatlining long moving average, currently 124.43. But for now, the market has decided to turn back down to the June 2020 low at 122.48. Euro sterling. A second, if slightly lower, indecisive spinning top yesterday, with a base on the Fibonacci line at 86.98, but more likely actually upon the flatlining long moving average, currently at 86.93, that is highlighted in gold on my daily chart. The market again pierced but did not close over the next overhead resistance formed by the April 2021 high at 87.19. The long moving average now seems to be starting to act as a possible base for this market. And the idea I raised yesterday that the move since earlier September may be a bullish half hesitation on top of the recent roof pattern with a potential target X2 in the 87.95 area. The overall bigger pattern still remains a June to September roof pattern with potential targets for this pattern of a primary target X above in the 87.42 area and a target that in effect has been achieved last Friday, and a harder to reach secondary target X1 in the 88.18 area. Now so far today, Well, a pullback lower down through the long moving average, though not as yet as far as the April 2020 low at 86.69. US dollar against the Indian rupee. A bearish closing black Mariposa yesterday, and I think for now I can say that we have had a breakout below the lower trend line of the previously pointed out ramshackle late July to mid-October ascending triangle. I've also now highlighted this on my daily chart in dark blue. I can now also set out possible targets for such a pattern. Thus, the primary target X would be in the 82.45 zone, with a secondary harder to reach target X1 in the 81.45 zone. I would still, once again, caution you on the possibility of false breaks here in either direction, just in case. Looking below, we now have the flatlining support of the short medium moving average, currently 83.03, and the late September low at 8300. We also have the gap below from September between 82.75 to 8300. And so far today, we're a gapping lower open since filled in, but with the market still heading lower, below the short medium moving average and filling in the gap left over from September, though seemingly none too anxious to try lower, and we're returning back to the short medium moving average at the moment. US dollar against the Brazilian real. A bearish black crow and a nice follow-on lower from the previous session's attempted bearish engulfing pattern. Prices dropped down to test the flatlining long moving average, currently 499.78, highlighted in gold on my daily chart, piercing it but failing to close below it. Overhead, we had the capping action once again of the combination of the Fibonacci lines at 507.39 and 505.73, especially 505.73, as well as the short moving average currently at 507.49. Below the long moving average, we have the combination of the upper trend line extension highlighted in purple on my daily chart of the August to September rectangle pattern currently at 498.02. The rising short medium moving average also currently at 498.05, and the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. Now, overall, the market continues to be moving within the breached but ultimately still valid November 2022 to date bear channel, currently 417.94 to 516.80, and it's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line, capping the market in early October. US dollar against the Mexican peso. A second bearish black crow yesterday and a suitable follow-on to the previous session's bearish engulfing pattern. The market mainly stayed below the neckline of the January to May head and shoulders top, currently at 18.2321, and that's the one highlighted in purple on my daily chart. And at the same time, was supported by the neckline, currently 18.0910, of the July to September lopsided reverse head and shoulder pattern. That's the one highlighted in bright red on my daily chart. This is also currently coincident with the previously mentioned September to date bull channel, currently 18.0910 to 18.9192, and that's highlighted in dark green on my daily chart. I am beginning to pay close attention to this bull channel, though I am mindful that we have targets further up and that the October action is beginning to show elements of a possible double top. Overall, one could still say the market continues to consolidate its move up and away from the long moving average below, currently 1771.98, but not anymore from the significant bright red neckline of the July to September lopsided reverse head and shoulders bottom. Prices have earlier managed to achieve some notable targets on the top side. The primary target for the March to July descending wedge pattern, the pattern highlighted in bright green on my daily chart, as well as the primary target for the break higher out of the long-term September 22 to October 2023 bear channel. The pattern highlighted in dark blue on my daily chart, as you can see there. However, the harder to reach secondary target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel, both at the 1894 even area, well, those are still open higher up, and I'm starting to have some doubts about them. I also have not placed any primary or secondary target tops for the reverse head and shoulders bottom as yet, mainly because we are still close to the neckline and because I'd like to see target X2 either reached or rejected. So far today, well, a dip down to the combination of the lower bull channel line and the neckline, but then a halt as any move further down would threaten two patterns simultaneously.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.